what's happening? It's Bill with Franklin Loan Center. And this week I just wanted to jump on and just talk about there is just so much data coming in that has potential to have real impacts for real estate. And so just kind of wanted to run through some of these things and just kind of what it would appear the impact would be, right? So first starting off with last week was a Fed week, so 2-day Fed meeting. They always make the announcement on Wednesday, the second day, and so what the Fed, it was widely accepted, and the market was fully ready for a 3/4 point increase in the Fed funds rate, which is exactly what happened. And so that was great. The market actually liked that. The market likes it when they do things that they can expect, right? What happened though is that after the Fed, so they always make the announcement and then they have a Q&A session about 30 minutes later where they bring in a bunch of economists from all over the US and have them ask questions. And so that's where the damage got done, right? And so the Fed kind of went amok on one of the questions and talked about how they're now all of a sudden thinking they may have to actually raise rates even further than they were initially thinking to really come, bring this inflation down. And the market did not like that at all. That was a bad day for mortgage rates. We saw a definite increase that lasted for a couple of days. And so in the market, so what the Fed is talking about is the problem what the market doesn't like about that, I should say, is that you end up in this situation where, look, it takes these Fed increases take like 3 to 6 months to even kick in, right? So a bunch of these increases that have been done, that's the 4th or 5th increase, they haven't even started to take effect yet. And the Fed is now talking about continuing to stay slammed on the brakes to try and slow the economy. And it just, the market just doesn't like it, right? So it's like, is the Fed just so out of touch that they're just going to nosedive the economy into the ground? So we'll see what happens there, but that's what happened last week. Then Friday last week also, jobs data. That jobs data came across. Actually, the headline number was a bit better than expected, but when you dug deeper into it, there's actually 2 surveys that happened, and the household survey actually came in quite a bit worse. After you do, the Fed, of course, they don't interview everybody, right? So they apply a bunch of just metrics and things like that. And so anyway, that household number, it is showing weakness in the employment data. We're starting to hear about some layoffs or at least freezes in hiring. So we'll see what happens. Look, I'm not hoping for anybody to lose their job, but that unemployment is still at record lows, right? I mean, the unemployment rate did tick up a bit, but even 3.5, 3.7%, that number's historically very, very low. So we'll see. We'll watch that, but some constricting there is probably good for the real estate market. And then now, so this week, of course, yesterday was the election. That ain't over yet. And it certainly looks like at this point, it looks like there will be gridlock because they're going to split the House and the Senate. That's what the market's hoping for, right? I mean, I think that they just don't want to see any more spending out of the Democratic side, and the Republicans are, I guess, a wild card right now, so they would theoretically slow the spending down. But I mean, for me personally, I like the gridlock idea because I don't know that I can trust any of them, and I'd rather just see that they don't have the ability to really get anything through. And quite honestly, it seems like that's what the market's kind of hoping for too. So we'll see what happens there, but hopefully, or at least for me, I'm hoping for gridlock. So we'll see what happens. And then the one thing to really watch tomorrow is CPI, Consumer Price Index. That is a really important inflation read. And it's one that we've been talking about over the last, we've seen this coming for months, right? So the number we will get tomorrow is actually October's data. And this is the first one where the month-over-month number that's going to roll off is actually a little over a 0.6 number, which is on the high side. So that'll go out. We're hoping to replace it with something lower that would then bring that inflation down. And I just hope this turns into a pivot point where we see that, okay, this was kind of that area where we just started to move past that max inflation or peak inflation, as we keep hearing. Who knows? But that's what we're hoping for, and I hope it just sets the pace for a bunch of months to come. There's all sorts of different anomalies in the numbers, but it kind of does look like this could be it, and we've been, again, talking about this for a while. So just wanted to kind of get that word out there. Please like, share, comment, all that good stuff. And if you have any questions, thoughts, I'm definitely open to input, good, bad, or indifferent. So again, comment below. That is it, guys. I'll see you all next week.